In this video, I'm going to show you step by step how I built my financial plan to move overseas. After living abroad from 2015 to 2023, I'm going to share with you what worked for me and what I prioritize as the top financial priorities that allowed me to live overseas so that you can avoid the costly mistakes that I learned through trial and error. Now, make sure you watch the entire video because I'm going to share with you some tools that will help you during your planning process. Now, I first began doing research about living abroad in 2015, over 10 years ago, because I was working an overseas government contractor job, and I learned that I could avoid paying US taxes. More about that further along in this video. Now, I would think to myself, like, if it's so much cheaper to live overseas and I'm saving in taxes, this is a win-win around the board. But then when I would relocate to these different countries and start living abroad, 3 to 6 months into it, I would realize that I was bleeding a lot of cash and I wasn't saving anything, even though the country was cheaper. And this prompted me to be more judicious about my financial plan and how I was going about living overseas. Priority number one is having a stable income source. Not all employers allow remote work, or if you're running a business, you don't want a business that's reliant on you being in a certain location. Now, for me, at the time when I was living abroad, I was flying drones overseas. And then when I wasn't working, I was trading and managing investment accounts. I talked about this in another video about how I traded like a hedge fund. I'll leave that in the comments below so that you can check out that video. But my income source was very stable and it allowed me to have a lot of predictability in my income when I was abroad. Now, priority number two was deciding on the length of stay. This is very, very important because you have two situations. You have a situation where you can permanently live abroad, or you have a situation where it's just a temporary living situation. So right now I'm going to talk about the temporary living situation because this was a much faster, easier barrier to entry for me for living overseas, and it probably is going to be for you too. So when you're staying for a short period of time, let's say 3 to 4 months, this is going to allow you to avoid paying taxes in the foreign country. But most importantly, it's going to allow you to have more control over the cost over the long run. So what I would do is I would sit down and list out all the base costs, not including any type of recreational activities in the country. So how much was my Airbnb going to be? How much was my travel going to be? Costs like those. And then once I had that base cost, I would then see if I could just pay that base cost up front. Right? So if me going abroad and being in a country was $20,000, I wanted to see if I can get that $20,000 up front and just pay for the base cost. This allowed me to do two things. Number one, it allowed me to not have to worry about the month to month maintaining two sets of bills in the United States and abroad when it came to like the living situation and basic needs like food. But number two, it allowed me to go into the situation stress-free. I didn't have to worry about, hey, am I going to be able to pay my rent in the States and pay my rent overseas? Now, to help me plan around the discretionary expenses, this is where I use monarch.com. I wanted to know exactly how much money I was spending and where that money was going at in the United States first, so that I could create a financial plan around that overseas that allowed me to be successful. So when you go on monarch.com, this is going to allow you to track all your expenses and then categorize them. Now, what I would do is at a minimum, I wanted to use 60 to 90 days worth of history. And then I wanted to calculate what was my true monthly floor. This was the amount that my life costs in the United States right now, including doing recreational activities. And this was going to set the baseline so that I could understand, one, did I have a current arbitrage, like money left over from the money I was bringing in from whatever my income source is, but also this was going to allow me to determine what my quality of life could be like in a different country by comparing how that money would transfer over. So once I had that base number using monarch.com, I would look and say, like, can I go overseas and increase my life, or am I cutting it close and do I need to decrease my life because I have dual housing expenses since I was only living there as a temporary citizen and not a permanent citizen? So understand, I still had a mortgage in the United States. I still had insurance. I still had maintenance costs, all these different bills. And then I had my foreign rent and expenses on top of that. Now, I could have gotten rid of my house in the United States and just sold it, but I'm going to save that later for the visa and tax situation. You'll understand exactly why I didn't choose to do that. Now, I'm going to take a pause right here. And if you're enjoying this content so far, what I want you to do is I want you to like this video and subscribe to the channel so you can be notified when I post new videos. And also leave a comment in the comment section below. And what is the dream country that you always wanted to live in? Also, I want you to follow me on Instagram at Finance with Santiago. I post a lot of content revolving around finance and living your best life. So let's continue on with the video. So priority 3 is increasing the variable expenses that I found out in step 2 from monarch.com. Now, my experience living abroad is that anything that's service-based, so things like food, Ubers, haircuts, they tend to be much cheaper, but that's not the full picture. So let me give you an example. If it's a Tuesday night and I'm in the United States, more than likely I'm at home. I'm not really doing anything because I'm used to being here. I'm not doing anything. But a Tuesday night in Medellin, Colombia, when I was living there, best believe I was out and about at a minimum if it was just going out to a restaurant and getting something to eat. And $20 here, $50 here, $10 there, it begins to add up very fast. And it begins to be like drips coming from a leaky faucet that begin to fill up a bucket. You can easily add up to $1,500 to $2,000 in extra recreational expenses if you're just going out every day, spending money here and there. This also doesn't include any type of international transfer fees. So when I would go to the bank overseas, you're taking a 5 to 10% hit anytime you're taking out money. When I was there for extended periods of time, I couldn't travel with the amount of cash that I needed. Imagine pulling out $1,000, and each time you pull out $1,000, you're paying $50 to $100 just in fees. Now you do this frequently and it begins to add up really, really fast. So although I was saving money on the service side with like haircuts and Ubers, things of that nature, all these extra underlying hidden costs begin to add up, and I needed to create a plan around this. So what I did to solve with this is I took the information from monarch.com, what we did in step number 2, and I looked at all of my recreational expenses in the United States. And then I increased that by 20 to 30%. You heard me right, 20 to 30%. This gave me a large buffer because I didn't want to be restricted being overseas. To me, that just defeated the entire purpose of doing this in the first place, right? Like if I'm just gonna go and live in a different country to sit in the house and not enjoy my life, I might as well have stayed in the United States. Now, I didn't do this when I first started living abroad, and I learned the hard way, which led me to the point where I said I needed to create a more strategic financial plan, because what was happening is I was bleeding cash every single month, and I look at the statements at the end like, wait a minute, I'm living in this cheap country. I'm not saving no money. I'm just bleeding through cash, and I'm in a worse financial position than what I was in the United States. So going to a cheaper country doesn't always mean that you're going to come out on top. So priority number 4 is the visa and the tax situation. Now, this is the most important section that you need to understand to be successful in building a financial plan to live abroad. So most countries, not all, but most countries allow you to stay there up to 90 to 180 days without any type of visa and without paying any type of taxes. So what I would do is I would bounce around to different countries. So let's say I would start off in Colombia and I would spend 90 days there, and then I would go to Costa Rica and then spend some time there. And then maybe you go to Panama and spend some time there, because I didn't want to pay any type of foreign taxes. But even though I wasn't paying taxes, the fact that I was bouncing around from country to country is I was paying more in travel costs. And this easily added up to an extra $5,000 to $10,000 per year that I needed to account for in my financial plan. Now, the reason that I wanted to bounce around and not pay the foreign taxes is because you need to come up with that money out of pocket up front. Let me explain this to you. So if you have a W-2 job or a business, you still owe the US government taxes. Now, if you decide to go the visa route and you have a visa and you're over for a certain amount of days, a lot of countries, once you get over 180 days, you owe taxes for that country because you're there for an extended period of time and you're earning money while you're in that country. Each country is different. You want to check the laws, but as a rule of thumb, over 180 days, you're going to owe some type of taxes. And what ends up happening is that you pay taxes to the US government. You have to come up with the cash up front to pay the foreign taxes that you owe in the country that you're in. And then you have to go back and file your taxes in the United States and get the refund for the amount of taxes that you paid for the other country and then rectify it. But you still have to have the money up front. Now, using the bounce around method, when you stay somewhere 90 days and you don't owe the foreign government taxes, what you can do if you're strategic is plan around this and not owe taxes both in the United States and the country that you're staying in. This is where it gets really interesting. So the United States has what's called the Foreign Earned Income Exclusion. This is IRS Form 2555. And in this law, it states that if you are outside of the United States for at least 330 days, doesn't matter where you are, you can be exempt from paying a certain amount in federal taxes. So you want to look up the IRS Form 2555 and see what the exemption amount is. So this created a situation for me when I was planning my finances where if I knew I could stay out of the country for at least 330 days, I knew I would get a good portion of the amount I paid in taxes to the US back. And then I didn't owe any taxes to the foreign country. So then this money that I was getting from not paying taxes paid for the trip in itself. All the extra costs that I was incurring and flights and social life, it paid for itself because I didn't owe any taxes to any government. Now, I will add a tax disclaimer and say, I am not a CPA. I am not your tax professional. But when you're planning your finances, you can plan this ahead of time in your financial plan and then go ahead and contact your tax preparer so that you can see and tell them, hey, I want to do this. What do I need to make sure that I do that's necessary to ensure I can enact on this tax law? And this could create a situation where you're saving thousands of dollars in taxes. It's a great situation to be in. Did it for 8 years. It was wonderful. So first, you want to understand what is your source of income and is it sustainable abroad? You want to decide, is this a temporary situation or a permanent living situation? Depending on if it's temporary or permanent, will decide how you need to treat the tax and visa situation. You want to know your numbers. Log on to monarch.com, connect your accounts, get really deep in depth on 60 to 90 days or even more if better of financial information to know exactly what your baseline expenses are and exactly what your recreational expenses are. Add the 20 to 30% buffer to account for your social and lifestyle expenditures that are going to increase overseas. Then you want to account for your international transfer fees that you're going to be paying anytime you pull out any money. Now, one thing I didn't mention when I was walking through these steps is having an emergency reserve fund. Unexpected things happen overseas. Flights get canceled, medical emergencies happen, fines happen in customs all the time. I've seen it happen. So at a minimum, you want to have 2 to 3 months of living expenses just stored away in a savings account for emergency. This is at a minimum. You never know what can happen and you don't want to be stuck overseas if you don't have any money. That's a bad situation to be in. Now, I learned a lot of this through trial and error, living overseas, making a lot of these mistakes, and I created a ton of memories in many different countries. So now that you know how I build a financial plan to live overseas, what I want you to do is check out my video that I'm going to link above about how I begin to build passive income to plug any income gaps while I'm living abroad.